Invite the management of MapmyIndia on this development. The Mappls Gadgets for automobiles and two-wheelers, which includes GPS trackers, dash cameras, navigation systems, Navi and infotainment systems, and smart helmet kits. These gadgets can prevent vehicle theft, help recover stolen vehicles, or reconstruct why an accident occurred in the first place. Rohan Verma, CEO and ED at MapmyIndia, is now with us on the show. Rohan, morning, and thanks for joining in. This is Rima here. Could you talk about the product acceptance? This was introduced by you a month back, towards the end of February. How many gadgets have you sold so far? What's the run rate?
Thanks a lot, Rima, for having me. See, with the IoT gadgets, as Prakash was mentioning earlier, we have a pretty strong acceptance of our navigation application and platform, of our tracking application or road safety application and platform, and the maps underlying. With gadgets, we've been servicing the fleet market for a long time, selling to fleet transporters, to logistics companies, to taxi companies, etc. Now we have also added on the consumer market, because you see that 280 million vehicles on the road, 70% of which are for personal use, four-wheelers and two-wheelers. Now with that, the acceptance has actually been quite good. We are actively selling through hundreds of showrooms across the countries for vehicles, four-wheelers and two-wheelers, where it goes as an accessory or an after-sale product which people use to upgrade the car from a hardware point of view. If you have like your wife or kids traveling, or your driver going, you'd like to have a live CCTV view through a dash camera of what's happening in the car. Or if an accident happens, then whose fault was it really? Or with the infotainment system, you get this nice connected infotainment navigation, which is embedded, but also having live traffic and safety. And if you're wearing a two-wheeler, this smart helmet visor, which gives you navigation in your helmet versus having to look down on the phone. So from all those perspectives, you know, it's gotten good acceptance, gotten good traction, and that's part of the scale-up of our IoT business, which is happening.
So what you're telling us, Rohan, is that these gadgets were already there for B2B. You were already selling it to enterprises. Now you've introduced it to consumers, and with B2B, you've seen very strong acceptance. What about B2C, which you've introduced in the last 1 month? How many have you sold to retail consumers?
Yeah, I mean, we'll not go into specific numbers given silent period, but suffice to say, as I said, if hundreds of showrooms are selling it actively, a bunch of OEMs are signing up as a genuine accessory product. It's doing quite well, and it'll reflect in our IoT-led business numbers.
Okay, so can you give us, I don't want exact numbers, but what kind of growth do you see for the gadgets business, say, over the next couple of years, both in terms of a top line as well as what the margins could look like? I mean, is there opportunity to build on further margins? Are there levers? Just trying to understand, what this would mean for your revenue potential. Sure.
I mean, see, overall, we've kind of given a sense that the company on a consolidated IoT-led, map-led together is about a 35-40%, growth is what we are kind of calibratedly looking at. IoT has been growing fast, as you've noticed over the last year. Gadgets or consumer gadgets contribute to that part of the business. And in terms of margins, also what we've explained is, we've seen the history. EBITDA margin between 35 and 45%. And in that, with gadgets or IoT hardware for B2B, it's the same thing. First year, compressed margins on the hardware, followed by full-fledged margins on the SaaS year 2, year 3 onwards. With gadgets, we tend to bundle a couple of years of subscription with the hardware, so you see slightly more margins in year 1. So overall, I think this plays into our portfolio, because IoT also leads to, as Prakash said, it helps scale up the business. It gets more customers. You can upsell them more things. They start using our Mappls app, where we offer many more features, other add-ons, and from there the B2B business, where consumers who are decision makers in enterprises or are developers start using it for B2B use case. So overall, it's a very net positive for the company, helps us reach out with more use cases to more consumers, and adds the flywheel to our B2B.
All right. Hi, Rohan. Good morning. Rohan, I want to ask you about G Trophy. I think for 9 months, you're clocked close to 30-35 crores of revenues. What's the outlook here, say in the next 2 to 3 years? What kind of revenue potential are you looking at from that business?
See, it's a very large market out there for G2P or our IoT-led business, as we say. Because 280 million vehicles on the road, a couple thousand rupees, for the set of products, or that's just an average I'm trying to give you. So if you really look at the revenue potential, it's quite high. We'll be calibrated in terms of what market segments to go after so that we can have larger margins. We'll differentiate our products. We're doing a lot on video telematics now, which is leading to ADAS or road safety.
Rohan, try to give us a longer-term revenue number from this business. We got the potential. Just wanted to understand, you must be having some revenue target in mind from this business. So if you could tell it to us.
I think overall we've been calibrated in trying to explain to the market that, we look at these 35 to 40% revenue growth CAGRs.
Okay. For this business or for the entire business on the whole?
For the entire business, there'll be variance between some of the businesses. Yeah.
And just one more question, Rohan. I think you all update your order book on a yearly basis, right? And I think at the start of this year, it was around 700 crores. Now, a lot of analysts, they say, why doesn't Rohan update it more regularly? Maybe on a quarterly basis, on a half-yearly basis. If you want, you could also give us an updated number as on date. That would be lovely. But, that's a plea from the street, I think.
Absolutely. Happy to take that feedback. But as of now, since we've said we'll explain it at the end of the year, I'll stick to that for now. But we're always listening to what feedback we get.
I just had one more follow-up on, earlier you were telling us about the growth potential. Are you getting into electric vehicles in a big way as well? I know it's a very small market currently, but is there a lot of scope to grow there?
No, great question, Sonia. Actually, EVs require telematics and gadgets, absolutely. And this is a huge growth area for us. If you look at every large EV fleet in the market, all the good names that you know, they're all using MapmyIndia's IoT solutions for health monitoring of the batteries and the vehicle performance, besides the location tracking. And even if you look at battery safety, the OEMs are starting to use MapmyIndia's solutions because they need to know that the batteries are safe and have a predictive maintenance. So EVs are a fast-growing market, and we are bang in the center of it for battery health monitoring as well as vehicle monitoring or fleet monitoring. And also we provide a lot of EV optimization in terms of battery efficient routing, navigation, etc. We've seen some new car launches which are EV based, which come with our N-Case solution, latest being the XUV400, which came out in Jan. So exciting.
So you're already supplying to EVs currently, right? I mean, can you just give us some kind of indication what are your clients like in the EV space currently, apart from the XUVs you spoke about? And within EVs itself, what would the growth be? Any indication?
It's all the known large EV fleets that are out there. I mean, I don't want to name specific customers right now, but you and I are traveling by these EV fleets, typically taxis, etc. And then there are a bunch of new two-wheeler EV guys who are coming on board as well. So qualitatively, at least I'll say that it's doing quite well.
All right, Rohan, very quickly, 35 to 40% CAGR revenue growth is what you're looking at. Margin band?
So, I think we've guided in the past also this 35 to 45% margin range.
Margin band. Got it. Okay, thanks a lot, Rohan, for joining in and giving us all of those details. We look forward to chatting with you once you declare your numbers. But let's focus on the big stock of the day.